Nikunj, in terms of what the rest of the globe did and what we did for the week gone by, a slight underperformance.
Yeah, see, last week was okay. It was nothing great. It was nothing worrisome. The global cues were just about okay. Indian markets managed to hold on to key support levels. We did get that scare from HDFC Bank, and despite that scare from HDFC Bank, we did not see a very the market, in a sense, at low levels did find some support. Since we had a Saturday trading session, I would say market reacted to the Reliance numbers already, and we may not see that kind of a reaction coming in any of the large heavyweights, excepting banks, which we'll talk about. So in my book, the market still remains the same, which is that when there is a little bit of profit booking, a mild mean reversion, when markets are threatening to go below the support levels, that's the time you need to buy. The reverse of that is that when markets are showing you a promise to break out from key resistance level, when just you get 2 or 3 days of uptake, if you're a trader, you should start selling. You need to be cognizant that in the mid and small cap space now, there are some pockets of overexcitement, whether it is defense or some PSU names. But in general, I guess markets are not giving you a very strong directional cue. If I look at the price action, well, the price action is more negative than positive. The market reaction to, let's say, a news like Polycab or HDFC Bank, or even for that matter, what happened to some of the companies which have come out with numbers, I think that is very harsh. So we are in a market where bad news is getting punished disproportionately, good news is getting ignored. Markets so far have managed to find support at lower levels despite FY selling, and the inertia on the upside is clearly getting jammed, so to speak. So I won't use the word listless, but it's a market where for next few days you may just not get anything big on the Nifty, but yeah, stock specific, I think the market reaction has been rather nasty in some case.
Yeah, absolutely. And I think what really marred all through last week was HDFC Bank. I'm sure ICICI Bank is going to make up for some of that, or Kotak did attempt on Saturday itself. But the way HDFC Bank plunged, and I guess there is now that leadership change as well. It's clearly ICICI Bank over HDFC Bank.
So let's look at this graphic, Aisha. I think why is that graphic important? The reason why that graphic is important, because when HDFC Bank numbers came out, and because it's India's largest bank and it has got the biggest book, and when a bank like HDFC Bank, in a sense, goes through a painful quarter, then is this a sector specific concern, or is this a bank specific concern? This is a sector specific concern. Thankfully, it appears that the concerns what have come out of HDFC Bank, that is more like a company or a bank specific concern. Why? Liability, CASA and NIMS. ICICI Bank has grown, IndusInd Bank has grown, Kotak Bank has grown. So the good news is that the sector per se is not threatening to slow down. And if that is the case, then that automatically means that in the near term, money will gravitate out of HDFC Bank, which is an overowned position, back to other banks. So I will not be surprised post numbers, Kotak Mahindra Bank and ICICI Bank, they start outperforming. I will not be surprised at that lower levels, IndusInd Bank will find some support. So for me, I think this is excellent news, that the problem that HDFC Bank numbers are not a macro risk. It is not a macro banking event. It is very, very specific, and hopefully HDFC Bank should come out of it. The challenge is that since everybody was on the same side of the boat for HDFC Bank, funds and HNI investors, they were in a sense just drowned in HDFC Bank in terms of the position commitment. So the numbers have come as a nasty surprise, but thankfully that is not like a stock, that is not a sector specific concern. So there was a time, I'm using this example again, that Infosys became the benchmark. Infosys would sneeze and IT sector would get a flu. That does not hold true now. All of us thought that if HDFC Bank numbers are bad, and after all, it is a big bank, it's a big franchise, it is big in terms of size and reach. If they are slowing down in garnering deposits, the growth will slow down. But look at the numbers. That does not hold true for other banks. So touch wood. That means that other banks are in a much better shape. So if in a better shape in the near term, the interplay between growth and valuation, I think, is something which will not support HDFC Bank. It has been an underperformer, and it may remain an underperformer.
Okay, that clearly is HDFC Bank. That was the talking point. But I think the talking point today is going to be Zee Entertainment. The news came out yesterday that Sony Pictures has terminated that mega $10 billion deal with Zee Entertainment, saying that the closing conditions to the merger were not satisfied post the extension given in the timeline as well. And now brokerages, though Zee Entertainment, by the way, is denying all the allegations, saying that there was no breach under the terms of the MCA. But a lot of brokerages across the board have come out with their latest notes, and you can see it on your screens as well. The current rating is either a sell or a reduced rating. They slashed the target price, and more importantly, Nikunj talking about a sharp derating of valuation multiples, largely on the back of the fact that this was one of the key triggers for the valuations growing.
This was the only trigger. And the fact that it's just been yes, no, yes, no, yes, no, I don't know, I think the stock is just going to collapse. It is been an F&O ban. So imagine a stock where there is a lot of yes and no. It was an F&O ban. The positioning of Zee in a sense has been completely one-sided. The merger goes through, and then in the near term, first there would be technical pressure, then there would be compulsions of F&O, and then there would be a real adjustment for the stock per se. Now there is no point in trying to preempt how large or how big the fall in in Zee today really could be, because it's anyone's guess. But the fact that you are not going to find buyers coming out in a hurry and buy the Zee stock, there are a lot of concerns in the near term which are real in nature, which will take time before they are addressed. Concern number one, since Zee is a stock which is owned by HNI investors and by institutional investors, what call they are likely to take. More than 50% of Zee stock currently is held between institutional investors. What view they may take, anyone's guess. Second, what will happen? Could there be legal battle and legal proceedings both from the side of Zee and Sony? And could this just be a big drag on the company and its functioning in the court? There could be a case of that. See, operationally, markets were working with an assumption this would have created India's biggest media company, and now the dynamics completely would change for Zee in terms of the future assumptions. So it's a stock which today, needless to say, will be on the wrong side of the trade. It will take some time for the real price discovery to happen, but I don't think this is a stock where you want to buy the bad news. If you see a fall of 25, 30, 40%, you normally see buyers coming out. But in this case, that may not happen. In fact, it would be interesting to see that what collective call institutional investors will take now, considering that the promoter entity, or in this case actually is less than 10% ownership. So this is not bad news. This is terrible news. And I don't think there is going to be a visible light at the end of the tunnel. I think this is going to be a dark, long tunnel, at least for Zee shareholders, for a long time.
Yeah, absolutely. Still a work in progress. There are some reports indicating that perhaps shareholders are looking to even write to the regulator, Nikunj, saying that remove Puneet Goenka, let the merger happen if that really is the only niggling worry from Sony's end.
See, I don't think the merger will come back on the table now. I think it is very difficult to make a case that, Mr. Goenka, minority shareholders, they come to one side and they, in a sense, look at change of guard at the CEO level. The bottom line here is that Zee as a company is owned by institutional investors, more than 60%. What call are they likely to take? That's anyone's guess. B, will there be a shareholder activism which may happen in Zee? I don't know. Legal proceedings from the side of Zee and from the side of Sony, that may actually go through. Zee has failed to make some payments in terms of giving broadcast rights to Disney in the case. Then there's a proposed merger which has been on and which everybody is talking about when it comes to global level between Reliance and Disney. So that also will have its implications in the way how things would move. So it's not a stock where you really want to say that, oh, I'm going to buy the bad news. The reason why you should not go and buy the bad news is because the price discovery will take some time, because the sequence of events, earnings, technical pressure, all that is something which will not be settled in a day or so. And when there are a lot of other options, why just go for blind? I mean, go for seen. That's my limited point.
Yeah, okay. Let's now move across to Vinny, find out what the global comment